Blockchain technology has entered the mainstream financial sector, and Provenance Blockchain Labs CEO Anthony Moro is calling on regulators to provide clear policy guidance to ensure that the United States maintains its leading position in the digital asset space. Key points. 1. The role of Congress in blockchain policy development. Existing financial regulations often do not cover blockchain terminology or adequately address the capabilities of the technology. Congress needs to engage with the industry to create a clearer regulatory framework that promotes the application of blockchain technology. 2. Bank participation in digital asset custody. Currently, U.S. banks have limited roles in digital asset transactions, which restricts the widespread adoption of blockchain technology. Allowing banks to participate in digital asset custody and trading would enhance blockchain adoption and provide consumers with more efficient and convenient services. 3. Facilitating institutional and consumer engagement with blockchain. A balanced regulatory framework can support financial institutions and consumers, fostering a more inclusive digital asset ecosystem. Integrating existing structures with blockchain applications can improve efficiency and transparency, solidifying the U.S.'s leadership in Web 3.0 and digital finance. Summary. Blockchain technology is progressing towards mainstream finance, but regulatory uncertainty is hindering its further application in the U.S. Moro urges Congress to collaborate with the industry to establish clear policies that allow banks to engage in digital asset businesses and create an inclusive regulatory framework to promote the widespread adoption of blockchain technology in the U.S., thereby reinforcing the country's leadership in Web 3.0 and digital finance. Here is a briefing summarizing the content of several articles provided. The rise of Ethereum is unstoppable. As the second largest asset in the cryptocurrency market, Ethereum has recently shown impressive performance, attracting widespread attention from industry insiders. Firstly, Ethereum's weekly trading volume has surpassed $60 billion, reaching a new high since July. This indicates strong market demand for Ethereum, with investors actively buying and holding the asset. Analysts predict that if Ethereum can break the $4,000 mark in the coming months, its bullish momentum will be further solidified, potentially reaching historical highs. Secondly, Ethereum-related exchange-traded funds (ETFs) have also seen strong capital inflows. Since Trump's election, Ethereum ETFs have recorded net inflows for 5 consecutive days, totaling $431 million. This reflects increased interest from institutional investors in Ethereum, providing strong support for its price rise. Additionally, Ethereum is benefiting from the spillover effect of rising Bitcoin prices. With the overall cryptocurrency market in a bullish trend, Ethereum, as the second largest cryptocurrency, naturally garners favor. In summary, the surge in Ethereum's trading volume, significant ETF inflows, and the overall bullish sentiment in the cryptocurrency market create favorable conditions for Ethereum's price increase. Analysts are generally optimistic about Ethereum's future performance, believing it has the potential to reach new highs in the near term. However, investors should still carefully assess risks and conduct thorough risk management when participating in Ethereum investments. Bitcoin price hits new highs, outlook positive. November 13, 2024. Key points. 1. Bitcoin's price has surpassed $87,000, reaching a new high, with analysts predicting it may soon challenge the $100,000 mark. 2. Cryptocurrency analysis firm Santiment notes that investors are driven by fear of missing out, FOMO, flocking to the Bitcoin market, while traders are seizing the opportunity to sell their holdings. 3. Despite the bullish market sentiment, Santiment believes that as long as large investors continue to accumulate Bitcoin, there is still room for further price increases. Over the past year, wallets holding 10 or more Bitcoins, whales and sharks, have collectively increased their holdings by 234,150 Bitcoins, valued at approximately $19.76 billion. 4. Analyst Kaleo predicts that Bitcoin's price may challenge $90,000, followed by a brief correction, but will then rise again, ultimately aiming for a target price of $150,000. 5. Corporate giant MicroStrategy continues to aggressively accumulate Bitcoin, recently purchasing 27,000 bitcoins, bringing its total holdings to 279,420 bitcoins, valued at approximately $23.55 billion. The company plans to acquire an additional $42 billion worth of Bitcoin over the next 3 years. In summary, buoyed by favorable news following Trump's election, Bitcoin's price is in a strong upward trajectory, poised to challenge the $100,000 mark and potentially reach $150,000. The ongoing accumulation by large investors and the FOMO sentiment among retail investors provide robust support for Bitcoin's bullish market trend. Insufficient relevant content to generate a news report. 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 November 13, 2024 briefing. Coinbase CEO Brian Armstrong criticizes regulatory overreach. Summary. Coinbase CEO Brian Armstrong recently criticized the government's regulatory overreach and lack of transparency, highlighting the ongoing debate between the cryptocurrency industry and regulators. Armstrong stated that government agencies are making decisions beyond their authority due to political influences, which he sees as a problem of big government. He believes that if the government were smaller, there would be nothing to control. Armstrong's criticism primarily targets the Federal Deposit Insurance Corporation, FDIC, for instructing banks to pause or avoid providing banking services related to cryptocurrencies. Coinbase Chief Legal Officer Paul Grewal pointed out that they have identified over 20 instances of such actions by the FDIC and called for the agency to be accountable to the public rather than acting behind bureaucratic curtains. This criticism comes amid legal disputes between Coinbase and the SEC and FDIC. Coinbase alleges that these regulatory bodies are attempting to obstruct the cryptocurrency industry's access to banking services and have failed to comply with Freedom of Information Act requests. Armstrong has previously criticized the SEC for its inconsistent stance on digital asset regulation, which has created confusion and uncertainty in the industry. In summary, Coinbase CEO Brian Armstrong calls for a smaller, more transparent government to prevent regulatory agencies from overstepping their authority due to political influences, reflecting the ongoing tension between the cryptocurrency industry and regulatory bodies. November 13, 2024 briefing. Charlotte Hornets under Charlie Lee. Main content. 1. Serbian guard Vasilija Micic has joined the Charlotte Hornets, but has only appeared in 3 games, totaling just 21 minutes of playtime. 2. Hornets head coach Charles Lee stated that although Micic has not made it into the rotation, he maintains a professional attitude, actively participating in team practices and games, providing valuable insights. 3. In a recent overtime loss to the Philadelphia 76ers, the Hornets' record stands at 4 wins and 6 losses. Lee noted that Micic has consistently maintained the right mindset and professionalism, serving as a good example for the team. 4. Despite Micic's limited playing time, Lee praised his professional attitude and contributions to the team, highlighting Micic's qualities as an outstanding player and teammate. 5. In their next game, the Hornets will host the Orlando Magic. Under Lee's leadership, the team hopes to quickly turn around their fortunes and regain victory. In summary, this briefing focuses on Micic's performance and status within the Hornets, emphasizing his professional attitude and contributions to the team while also reflecting the team's current record and upcoming game arrangements. The content is concise and clear, highlighting key points and providing comprehensive and valuable information to readers. November 13, 2024 briefing. Gavin Wood and the JAM project. Main content. 1. Web0 will host the Sub-Zero Reset Conference in Bangkok from November 9 to 11th, inviting industry leaders including Polkadot founder Gavin Wood. 2. The conference focuses on the most exciting innovations within the Polkadot ecosystem, the Jam Chain project led by Gavin Wood, which aims to advance the project into the implementation phase and showcase the most innovative projects built on Substrate. 3. The JAM project elevates Polkadot's architecture to a new level of flexibility, maximizing the potential of its core for any validation task, whether smart contracts or sovereign blockchains, and aims to provide solutions to scalability and consistency challenges in Web3. 4. The conference schedule includes the first day as an education day, the second day as a modularity day, and the third day as a jam and scalability day. The conference also features a 24-hour hackathon space, providing new teams with opportunities for collaboration and competition, with prizes of up to $10,000. 5. Web3 Foundation CEO Fabian Gomp stated that the Sub-Zero Reset is the best opportunity for global developer talent to gather and learn about cutting-edge innovations in the Substrate and Polkadot ecosystems. In summary, the Sub-Zero Reset conference focuses on cutting-edge technological innovations within the Polkadot ecosystem, particularly the Jam project led by Gavin Wood, aiming to position Polkadot as the next-generation Web3 infrastructure. The conference offers a wealth of technical sharing, project showcases, and hackathon activities, injecting new momentum into Web3 development. November 13, 2024 Briefing: Cryptocurrency company Consensys lays off 20%. Summary: 1. Consensys announced a 20% layoff, affecting 162 employees, which represents a significant portion of its total workforce of 828. This decision is attributed to macroeconomic pressures and ongoing regulatory challenges facing the industry. 2. Consensys CEO Joseph Lubin stated that multiple cases involving the U.S. Securities and Exchange Commission (SEC) represent a significant loss of jobs and productive investment due to the SEC's abuse of power and Congress's failure to address the issue. He described this attack from the U.S. government as causing companies under investigation, prosecution, or receiving Wells notices to lose millions of dollars. 3. Consensys indicated that rising interest rates, inflationary pressures, and tightening liquidity have led to a more cautious macroeconomic environment. Additionally, the lack of regulatory frameworks in certain markets has made operations more complex. 4. Consensys is a blockchain company focused on Ethereum, providing products that enable developers, businesses, and users to build applications for the Web3 space. Its primary product is the popular MetaMask self-custody cryptocurrency wallet. 5. In April, Consensys sued the SEC over regulatory issues concerning the Ethereum blockchain. In June, the SEC also sued Consensys for failing to register its MetaMask swap service as a broker-dealer. In summary, Consensys is facing dual pressures from macroeconomic and regulatory challenges, necessitating significant layoffs. This highlights the severe challenges facing the cryptocurrency industry, which requires ongoing negotiations with regulatory bodies. Briefing: Jihan Wu and Boston Mayor Michelle Wu's tax proposal. Jihan Wu is the undisputed king of cryptocurrency mining hardware and pools. His company Bitmain, headquartered in Beijing, was recently valued at $12 billion, following its latest funding round. Wu is a strong supporter of Bitcoin Cash, a controversial fork of Bitcoin. Earlier this year, his company led a $1.1 million funding round for Circle, the highest-valued crypto startup in the U.S. Wu has expressed interest in stablecoins, price-stable virtual currencies, and plans to diversify Bitmain's business by developing AI chips. Meanwhile, Boston Mayor Michelle Wu is pushing for a temporary increase in commercial property tax rates to alleviate the anticipated rise in residential property taxes next year. This plan has been approved by the City Council and passed the State House in July. Now, Mayor Wu hopes to gain approval from the State Senate and Governor by the end of November. Mayor Wu has rejected alternative proposals, such as implementing budget cuts or using financial reserves to provide residential tax relief. She believes these options are either impractical or violate state law. Mayor Wu emphasizes that maintaining the city's safety, cleanliness, and quality of life is crucial for the prosperity of residents and businesses, and cannot be achieved through significant budget cuts. In summary, Jihan Wu is promoting diversification at Bitmain, while Boston Mayor Michelle Wu is working to ease the pressure of rising residential property taxes through an increase in commercial property taxes, reflecting important trends in their respective fields. The rise of blockchain technology and the mysterious figure of Satoshi Nakamoto. Summary: the development of blockchain technology has brought revolutionary changes to digital contracts and transactions. One of the most representative concepts is that of smart contracts, first proposed by computer scientist Nick Szabo in the 1990s. Smart contracts are self-executing digital contracts that automatically perform agreed-upon actions when specific conditions are met, thereby enhancing the transparency, efficiency, and security of transactions. At the same time, the birth of Bitcoin has sparked widespread speculation about its mysterious creator, Satoshi Nakamoto. Despite several suspects being identified, Nakamoto's true identity remains a mystery. This anonymous creator has not only brought disruptive innovation to the digital currency space, but has also become a spiritual leader for the entire cryptocurrency community. This report comprehensively outlines the key milestones in the development of blockchain technology, from the basic principles and operational mechanisms of smart contracts to the mysterious identity of Bitcoin's founder, Satoshi Nakamoto. The report also explores the challenges faced by these technological innovations and potential future trends, providing readers with a thorough and in-depth understanding. Smart contracts, a revolution in automation and trust. Smart contracts are digital contracts based on blockchain technology, with the core feature of automatically executing pre-coded terms and rules. Compared to traditional contracts, smart contracts offer the following advantages. 1. Increased transaction transparency and trust. All parties involved can view the contract terms and ensure they are executed as expected, reducing the risk of disputes. 2. Improved efficiency and reduced costs. The automatic execution feature eliminates the need for intermediaries, significantly shortening transaction times and lowering costs. 3. Enhanced security. Once deployed, the content of smart contracts cannot be altered, ensuring reliable execution of contract terms. The application of smart contracts is rapidly penetrating various fields such as finance, supply chain management, and government, bringing new development opportunities to various industries. However, they also face challenges such as coding complexity, lack of flexibility, and legal uncertainties, necessitating ongoing technological innovation and regulatory improvement. Satoshi Nakamoto, the mystery of Bitcoin. The emergence of Bitcoin marks the beginning of the digital currency era, and its mysterious creator, Satoshi Nakamoto, has become a legendary figure in the cryptocurrency space. Despite several suspects being identified, Nakamoto's true identity remains a mystery. Some believe he may be an individual, while others think he could be a team. It is estimated that Nakamoto may hold over 1 million bitcoins, but these figures are merely speculation. Nakamoto's mysterious identity has not only sparked widespread speculation but also made him a spiritual leader in the cryptocurrency community. People often cite Nakamoto's vision to support their viewpoints, reflecting his significant position in this emerging field. Future outlook. As blockchain technology continues to advance, smart contracts and digital currencies are expected to expand into more fields.